Good afternoon. Welcome to Midcap Radar. I'm Reema Tendulkar. With me is Sonal Bhutra, and these are the top stories at 1:30 p.m. Markets extend losses to trade near the day's low. The Nifty falls below 17,550. The Sensex sheds over 1,000 points. The Nifty Bank is the key drag, with the index down 3%. The Midcap index falls 2%.
Adani Group stocks take a beating on research firm Hindenburg's report projecting a 85% downside in the group stocks.
Banks underperform. Midcap banks like J&K, Union Bank, Bank of India, Bank of Maharashtra lead the fall with a 5 to 10% decline.
Dixon Technologies slumps 19% today after missing sales expectation and trimming its guidance. Indus Towers slips for the second day in a row, down over 13% on receivables risk from Vodafone Idea. Okay, those are the headlines that we are tracking, but the key headline definitely is the fact that the markets have fallen and there is no respite which is in sight, because right now Nifty is sitting with cuts of around 340 points. It's a 1.9% cut on the benchmark index, and the Bank Nifty is the one which is underperformed with cuts of around 3%. At the day's low, there was an attempt of recovery, but that has been sold into. And big Nifty names, they are falling around 18 to 20%. Of course, those are the Adani Group stocks which have taken a beating today. In the broader markets as well, there were no signs of any any recovery from the lows, so to say. And Reema, we've been seeing it for last two trading sessions. On Friday as well, Bank Nifty was the underperformer. In last couple of 2-3 trading sessions, Bank Nifty is around 6%. So definitely a lot of pressure.
Absolutely, almost capitulation, right?
Yeah.
The way you're seeing the broader markets also collapse. The advanced decline ratio has one stock in the green for about 9 to 10 in the red. So you've got about less than 300 in the green to about 2,700 stocks currently in the red. So there is widespread decline that you can see. And these are two back-to-back very large days of decline. On Wednesday, the Nifty fall was 225 points. We followed it up with a 325-point decline. Even in the mid-cap banking space, the fall on Wednesday was, I think, close to about 1,200 points. It's down another 1,300 points today. The levels, it's just some important levels as we've been highlighting. Currently around 17,500 is the 200-day exponential moving average. Currently, we seem to be finding some support there. Below that will be the 200-day simple moving average, which is 17,290. If that is also breached, then the next level to track will be the September-October low, which is 16,750. So these are some levels that you should keep on your mind. Jay Bala of cashthechaos.com is the man who's going to be telling us how we could proceed from here on. Jay, you've been very bearish on the markets. I remember in a couple of conversations back, you had indicated that it will not be surprising if the Nifty even goes back to the June low of 15,300. There is a seminal decline on our hands now over the last two trading sessions. What are the technicals suggesting for the near term and medium term?
Yeah, thanks for having on the show, Reema. The markets are coming to a very important medium-term support level of 17,428. And that's the last fuels of hope for the bulls. If the market were to print 17,428, there are no bullish options left for the markets except to go below the June low of 15,000 odds. And that's the medium-term outlook. From a short-term perspective, the IVs for the markets are quite low. If you look at the derivative markets, the markets are going into February, the budget, and as well as the Fed meeting. And the IVs are quite low, so that's not quite helpful for a bullish case too. And, we could see extreme short-term bounces come through. But, they're very clearly on a sell-on price markets. And these short-term bounces are likely to be very fleeting.
Just one quick, understanding. Why is 17,428 such a critical support for us?
It's a Elliott wave technique that I use, and so it's a bit too technical to to get into that at that moment. Okay. So I won't get into it. So I just leave it at the point that it's just a technical setup.
Okay, so that's the technical setup. Any sector or any pocket that you think would see some recovery from the lows, Jay? Because even Bank Nifty, we've lost around 6% in last couple of trading sessions. What's the outlook on this index?
See, Bank Nifty has got considerable downsides to work with. ICICI and SBI are going to be leading the way down. And if you look at the pocket that might outperform. I've been saying it will be IT. And even in IT, we've got to be very specific. And in IT, I like persistent and Coforge and HCL Tech to an extent. HCL Tech to a lot less, but the order in IT is this: Persistent first, then Coforge, then HCL Tech. So, there are pockets, but, the pocket that will outperform, in my opinion, is going to be cash. If you go to cash now, you'll be having the same portfolio, and a few months down the line, you'll also have a lot more cash and the same portfolio. So, you want to, it's not too late to go to cash even now. I've been saying that you should go to cash, several weeks ago, but even now it's not too late. Use the bounces to exit.
Okay. On banks, you had indicated that 40,800 is an important support. Now we are trading well below that level. We're currently at about 40,300, in fact, even lower than that. Does the bank Nifty decline further from here on?
Yes, definitely. See, Nifty is not going to go down on its own, and the bank Nifty is likely to stay afloat. That's not going to happen. The bank Nifty is also going to go back somewhere close to the June lows. It could probably, slightly, outperform in that relative sense, but, much lower levels are expected for, the banking index. The ICSA has got a heavy weight in the bank Nifty, and SBI is a top weight for the banking index, and each of them are likely to decline about 20% from here, but that's not on the immediate basis, but probably, several weeks to a couple of months from now.
Okay. Jay, that is about the bank Nifty. And you also spoke about how you see some recovery, at least in the Nifty IT. But what's your take on the Nifty auto sector? Because, the numbers have been good. Fundamentally, of course, that space is looking better. Technically, how do things stack up?
Yeah, the bank Nifty the bank Nifty auto is managing to stay afloat, important support. But, it's an exhausted trend. We had a topish pattern a couple of weeks ago. Even if the bank Nifty Auto were to make its fresh 52-week highs, it will be an exhaustion top, and you might want to use that as an exit opportunity. When the sentiments turn sour, very very unlikely that any sector will be left, doing something like swimming against the stream. The stream is flowing down. You can't, swim upstream. It's quite difficult. You can't sustain that for long. So, you might want to use these bump ups as exit opportunities.
Very quickly, Jay, is the risk reward favorable to go short now? Because we've already fallen more than 500 points, and the support level that you're watching, 17,428, we're just about 120 points away from that. At the current juncture, is there a trade?
It depends on what time frame you are looking to hold for your short. If you are looking to roll it over, yes, definitely there are opportunities here. But from if you're going to be holding for the immediate Thursday expiry, I think that will be a little bit late. So you might want to wait for a sort of a bounce back for the markets to come through, and then use that for shorting for the extreme short term. But if you're a trader who can roll over contracts for a couple of months, then definitely there is still opportunity. But even there, you want to wait for building up your position on a rise, not exactly at the current position. You might want to take up small positions right now, but on a rise, you want to build further positions.
Okay, all right. We take that point, Jay Bala. Thank you so much for joining us with that technical check on the markets, of course, important on a day like this. And that's, of course, because of the pressure that we are seeing on the Adani Group stocks. And those are down anywhere from 7 to 20% in trade, 25% as well. So let's get in Nimesh right now, who's joining us with more details as to what the possible triggers or the fundamentals, at least, for some of these companies are. Nimesh?
Hi, Sonal. So as you speak, most of the Adani Group stocks have recovered marginally from their intraday lows. So, in fact, it's been a 4 to 5% kind of recovery in all the F&O stocks of Adani Group in the last 1 hour of trade. Now, as you rightly pointed out, while there is panic selling across the board, including Adani Group stocks, there are some fundamental things to watch out as far as the Adani Group stocks are concerned. So let me start with Ambuja Cement first. Currently, it's trading at around 398. It had fallen to a low of almost 356. The open offer price at which Adani is bought from wholesale was at 385, and Adani promoters have decided to infuse money into the company via preferential warrants at a price of 418. So the stock was trading way below both the prices, the open offer price as well as the price at which the promoters are putting in money in Ambuja Cement. So that's a number to watch as far as the Ambuja Cement is concerned. In fact, just half an hour back, there was a report from Nirmal Bang as well, and they've recommended a buy given purely on valuations that they've become attractive now. and hence you're seeing a bit of pullback in Ambuja Cement. Now coming to the second stock, which is ACC. Even if you look at ACC, the stock is currently trading around 1900 odd levels, but the open offer price of ACC was 2300 levels. So again, it was sharply off the open offer price as well, the price at which the Adanis bought over from Wholesale. The third stock is Adani Ports. Now again, that stock intraday was down 25%. It's recovered marginally, 5-7% from the lows, currently about 600 odd levels. On Adani Port, there was a report from Kotak Institutional Equities today. They've upgraded the stock to buy purely on valuations, and they believe at 11.5 times FY24 EV/EBITDA, the stock is attractive. And of course, if you look at Adani Ports, it's a company which has got nearly 50% market share and commanding a margin of close to 65%. So even there, some sort of valuations catch-up has happened in the last 1 hour of trade. The last one is Adani Enterprise. That's going to be very important and very critical as well. The FPO for retail and HNIs have opened today. Remember, the price band is between 13.12 and 32.76. And on that, there is a 64 rupees discount to the retail investors. Intraday, the stock had fallen below the FPO price. I think it's still trading below the FPO price. So that's something to track for the next couple of days. In fact, there has been an anchor commitment of close to 6,000 crores. Of course, only 50% will come in at an upper end, which is upper end of the price band, which was 3276. So anchors have put in money at 3276, and the stock intraday had hit a low of 2850. So a lot of the stocks got heavily sold into, and there was panic selling. But there are some fundamental things to watch out as far as the Adani Group stocks are concerned.
Thank you very much, Nimesh, for highlighting that. Just a quick word, since we have you with us.
Sure.
What are the dealing rooms telling you now? What is it that you've learned about the fall that we are seeing? Almost a bloodbath now.
Yes, Rima. So, as far as the flows are concerned, the feedback was there is selling pressure in the financial names for the second day running, and that's clearly showing up in the Nifty banks. So, most of the large heavyweight stocks, whether it's PSU banks or private sector banks, there was selling pressure from the larger institutions. So that's the first part. The second part, I guess the sell-off is more brutal today because we've broken the crucial 17,800 on the downside. That was a very crucial support level, so to speak, from a technical point of view. Once that got taken out, there was a consistent feedback that once that gets taken out, you will see panic selling, and that's clearly played out in today's sale. So not only the bank stocks, the Adani Group stocks, but across the board, even the PSU stocks like REC, PFC, HPCL, those are under pressure today. I guess on the other side, some bit of nibbling is happening in the auto names, so that stands out purely on back of strong earnings, and there is a continuation of some bit of buying in the IT names as well. That's from a flow perspective. But I guess some of the crucial technical levels are broken off, and hence we've seen a big selling, not only in the Adani Group stocks, but across the board in banks as well as in the PSU stocks.
Okay, Nimesh, thank you so much for joining us and giving us that perspective. So that's what's happening as far as the Adani Group stocks and the market moves are concerned. For now, we'll slip into a short break. But before we do that, here's time for the CNBC-TV18 budget quiz. Remember, there are prizes to be won every day. We gave you the question at 9:14 today, but in case you missed it, here is today's question. This finance minister asked SEBI in the budget speech to raise the minimum public shareholding in companies to 35% from 25%. And your options are A. Arun Jaitley, B. Piyush Goyal, C. Nirmala Sitharaman, and D. Pranab Mukherjee. Send us your answers on Twitter. Post your answer as a comment on the question tweet on CNBC-TV18 News. Use the hashtag budgetwithCNBC-TV18. Now hurry and send us your answers. Remember, we will announce the winner at 3 p.m. today.
आग को फैलने से रोकना मुश्किल है, पर नामुमकिन नहीं। अब फायरवॉल टेक्नोलॉजी के साथ सेंचुरी प्लाइड क्लब प्राइम आग से बचाए।
देखो 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 नया टीवी देखो। Ah, got the veggies from Chotu's shop? He gives the right rate.
Yes, Papa.
Decided. 55-inch TV on this wall.
Oh, super. I'll write out the check tomorrow.
No, you don't. I will, with my own money.
Oh, wow. How come?
Look at this advertisement. 30% assured returns on investment. I am also going to invest my money.
So vegetables only from Chotu's shop, but investment advice from anyone? Papa, trusting a stranger's advice is never wise.
But what about the TV?
सोच कर समझ कर इन्वेस्ट कर
अम्यूजमेंट पार्क तो बंद है।
The all-new Slavia. Skoda. Simply clever. रिफॉर्म परफॉर्म ट्रांसफॉर्म से ग्रेट परफॉर्मेंस की कहानी लिख रहे उत्तर प्रदेश में यशस्वी प्रधानमंत्री श्री नरेंद्र मोदी जी के विजन के अनुरूप माननीय मुख्यमंत्री योगी आदित्यनाथ जी के नेतृत्व में आयोजित हो रहे ग्लोबल इन्वेस्टर्स समिट 2023 में आपका स्वागत है। 20 देशों के 10,000 से अधिक विजनरी बिजनेस लीडर्स के इस अंतर्राष्ट्रीय निवेशक महाकुंभ में गवर्नमेंट टू बिजनेस मीटिंग्स और रिकॉर्ड MOU होंगे। आइए 10 से 12 फरवरी को लखनऊ में नए भारत के ग्रोथ इंजन की स्पीड का हिस्सा बने, उत्तर प्रदेश में निवेश करें। नए भारत का ग्रोथ इंजन।
Friends, I want to share some good news with all of you. Firstly, like always, we have performed very well this time also.
But what will we get?
Secondly, we shall invest in employee benefit.
Come on, now tell us what will we get?
And thirdly, we shall invest in LIC's group funded plans.
Great, we'll get everything.
Now, leave encashment,
Gratuity.
and along with pension, our future is secure.
Yes, employees' real benefit lies in LIC pension and group scheme.
It is time to power your world. Hyundai Ioniq 5, the all-electric SUV.
Mutual fund funders.
The biggest risk is not investing and missing out on the chance to compound your wealth.
CNBC-TV18 presents Mutual Fund Funders.
When timeless European design meets cutting-edge technology, it's QO. QO, European Bath Lounges.
Welcome back. Still tuned into Midcap Radar on CNBC-TV18. While there has not been a major recovery in the benchmark indices, look at some of these Adani Group stocks. They have seen substantial recovery from the lows. Something like an Ambuja Cements, that should come up for you on the screen. It was down around 25% in trade at a point in time, and now it has seen some recovery, at least some semblance of recovery is what we are seeing. ACC2, which was down around 18 to 20%, has seen recovery of around 4% this point in time itself. It's off around 10% from the lows of the day as well. So yes, we are seeing some recovery in these stocks, especially on the F&O counter. Adani Enterprises is also off around 8% from the lows. Adani Ports, which was down 20%, is off 13.5% from the lows as well. So yes, there is some recovery that we are seeing. Bank Nifty, though, continues to be the big mover. It's down 1,300 points as we speak at 40,331. That's the level that we are watching out for Bank Nifty at the day's low. But let's move on to a special now. Before we do that, we'll look at some more stocks, Rima, because Adani Group stocks, of course, they've seen some recovery, but the others, especially the earnings, where we've seen a lot of weakness, that continues to see a downtrend.
I know. When was the last time you saw such a sharp earnings reaction to a stock reaction to an earnings miss? Dixon. Revenue, I mean, you've been tracking it, you've been reporting about it. Q3 miss, guidance cut, but 19% down. Indus Stars fell a lot in Wednesday's trade. It's followed it up with another 12%. So there is, you know, just the stock reaction to the earnings misses also gives you an indication.
Not liking miss at all.
Yeah, and no, I'm saying exactly a week back also when there were misses, you saw the stock fall 5%. But today, just the sentiment in the market is so bad that all the earnings misses are seeing a double-digit,
kind of Dixon Tech, the other thing is as well, because everyone was very bullish on their mobile business. We were talking about PLI scheme, we were talking about more exports coming in, contract manufacturing picking up. And this time around, their mobile business has not done well. So
why?
Because of a segment from Motorola, which has seen a sharp, their revenues have halved on a YOY basis as well. So that is why the big misses come in. They cut their guidance back in December on our channel. They've cut their guidance again. So twice if you cut the guidance, definitely the street is not liking that, and valuations are high. So yes, that's why we saw that big cut on Dixon Technologies as well. But let's move on, and we have been talking about a lot of stocks. This is our special now. Like we've been telling you, CNBC-TV18 has compiled a list of the top 20 stocks to watch for this year. It's a carefully curated list of companies that warrant a closer look in 2023. Abhishek is now standing by at the big wall. Abhishek, what is the stock on your radar?
Thanks for that. Today on my radar is Bajaj Finance. Bajaj Finance will be one of the stocks to watch in 2023 as competition from banks have increased in the last 2 years in its segment. So the share of personal loans in the banking sector was at 29.3% at the end of Q2 FY23 when compared to about 26.2% at the end of Q3 FY20. So couple of events needs to be watched for Bajaj Finance. The lender has been talking about their super app launch since the last few quarters. Need to see whether that comes in through 2023. Another event to watch out is that RBI is asking large and systematically important NBFCs to convert into banks. How will investors react to this and how will the street take this given the fact that there will be a dampener in the return ratios? We need to wait and watch for that as well. Now Bajaj Finance stock has been underperformer in 2022 as well. The stock has declined by around 9% in calendar year 2022 versus Nifty return, which was around 2 to 5% in the calendar year 2022. Largely due to the fact that, incrementally they are losing market share, evident from the fact that the growth rate is actually declining. A number which was around 30-35% levels is now about 27% on a YY basis, and the management expects the growth rate to be at current levels. So Bajaj Finance also has one of the segment called cross-sell rate, which has actually declined massively. So around 12.9% was the cross-sell rate in Q1 FY20, which is now down to 7.1% in Q3 FY23. This means their ability to market more products to existing customers has actually reduced massively. So this has also had its impact on the business performance of Bajaj Finance and also indicates increase in churn of customers. The stock's premium valuation multiple has seen a decline too, evident from the fact that a price to book value which it commanded around 10x is now down to 6x or 7x. Jefferies has written recently on Bajaj Finance, the valuations is down to long-term average multiple of 27x, 12-month forward PE and about 5.6x price to book value. In context of the fact that 26% CAGR is seen in PAT over FY23 to 25 and ROE of 23%, they think that it appears to be attractive. On the other hand, Macquarie says that overall loan growth is healthy, but at 27% YOY is below their expectation. Even the sequential loan growth has slowed down, which has not gone down well with Macquarie's estimates. So they need to see how the loan growth happens over the coming years, or it underperforms or moderates going ahead. CLSA says that loan growth has slowed despite festive season. The growth slowed sequentially. Q3 is usually a strong quarter due to festivals. Now brokerages have target price ranging from as low as 5,275 per share to as high as 7,280 per share. Back to you.
Thank you very much for that. TRAI, the regulatory body for telecom, has reported the November subscriber data. And for the two leaders, Bharti and Reliance Jio, there is a drop in the subscriber adds on a month-on-month basis. Reliance Jio has added 14 lakh subscribers in October. That number has come down to 2 lakhs, so a seminal drop there. And for Bharti Airtel, in October, they had added about 8 lakh subscribers. That's come down to 1.3 lakh subscribers. But the silver lining in these numbers is for Vodafone Idea, where after many months of a steep decline in their subscribers, in the month of November, Vodafone Idea has added about 20 to 21,000. It's not significant, but at least the decline has been arrested. It's, this data per se is not going to move the individual stocks, given, the kind of precipitous decline that we have. But before we get into a break, let me quickly give you the disclaimer to what Abhishek was telling us about Bajaj Finance. Remember this, the CNBC-TV18 list of 20 stocks is not a stock recommendation. The CNBC-TV18 editorial team does not advise on trading or investing in the stock market. Any investor or viewer is advised to carry out necessary diligence on their own or through a certified registered financial advisor for their investment decisions.